One of the biggest mistakes people make when it comes to their taxes is to wait until the last minute. Now, whether that's April 15th for most of us or October for the extenders, it's a year late. Either way, according to Jeff Vogan, our local independent financial advisor, fiduciary, and owner of Premier Retirement and Estate Planning, who joins us now. Jeff, welcome back.
Thank you.
Nice to have you on. So, of course, we know you help people plan for their retirement and, to be financially stable and secure for their future. But you say that tax planning is actually an important part of that, too.
Well, actually, it is. As I mentioned on a previous time that I was here with you, a dollar saved is a dollar earned, and taxes are a big part of income planning. I mean, whatever you can save in your own pocket and use is certainly a benefit, especially when we talk about retirement planning and just wealth management in general. And like you mentioned in your opening statement, most people don't even plan for their taxes until they're actually doing their taxes, and that's tax reporting, and that's a year late. Right. It's unfortunate that so many people find out what they owe taxes on last year after the year is over, and there really isn't time to plan. And so this time of year is actually a great time to start that, because there's still a couple months left that you can understand where your tax bracket's going to be, find out what kind of tax strategies you might want to implement to save taxes, maybe add a few extra donations to charities to get into a lower tax bracket, and a lot of different things that you can do, but you have to do them in the year that you pay taxes on, not the year that you report the taxes. Right.
And the fact that we're talking about this is actually, I think, pretty rare sometimes for financial firms, because a lot of them shy away from tackling subjects like this. Why is that?
Well, I think there's a couple of reasons. Some kind of a pet peeve of mine is most financial firms just like to just really focus on the things that they make the most money on, and that is, stocks, bonds, and cash, and what asset allocation, what fees are we going to get, what commissions are we going to make on these things. And unfortunately, that has nothing to do with tax planning, but every decision that an advisor or every investment recommendation an advisor makes to a client has a tax consequence. And so I don't understand why firms don't take that on as a more important part of what they do. And I think their idea is, well, we just don't want the liability of tax planning. Well, if you get somebody into trouble by making recommendations that have bad tax consequences, I think you are liable, more liable than actually planning for it in the first place. And I think the other thing is, well, we're not CPAs. We don't want to, get involved in their area. And most CPAs are great reporters. And most CPAs, because they're great reporters and understand tax code, know what to do. But a lot of times we don't ask the person who reports our taxes to plan our taxes, and often they're not really that familiar with the types of products and services and strategies that can actually be implemented to make the best of it.
Right. So do you work with CPAs, or does your plan just sort of stand on its own?
No, that's a great question. And obviously, there's some technical things that you need a CPA for. We do have CPAs we work with that we always bounce difficult things off of. We have advanced tax planning teams that we use. But there's a lot of things that are really, in my opinion, very basic that people can do to save taxes that they're not getting that information until it's too late.
Basic. So there's some basic planning strategies, like you say. Can you run through a couple of those with us?
Well, okay. Man, there's such a long list. Part of it is just knowing your tax bracket and what you can do as far as income. Some people, for example, in retirement, don't know how much retirement income from IRAs to use, because all of it, when it comes out, is taxable. Some people may retire and have a few years before they are forced to take out IRA money at age 70 and a half. Some people don't realize that that's going to be forced upon you. And there's a window of opportunity where some people can move IRA money into a Roth IRA, which is a taxable distribution while they're maybe in a lower tax bracket, so that it's tax-free income later when they are at an age where maybe they're forced to take more IRA income and forced into a new tax bracket. So understanding what you're in and projecting your income through different stages of your income producing life, whether it's during work, whether it's during that window of opportunity between maybe when you quit work, start taking Social Security, and start having to draw on your retirement assets in qualified or IRA, 401k plans. Just strategizing that is probably a good place to start.
Well, there's so much to keep track of, and that's why it's so essential to really go to a professional to make sure that everything is straightened out, make sure everything is where it's supposed to be. Now, if someone's listening and they say, I don't know where to start, what's the first thing you would tell them to do to sort of get their feet wet?
Well, obviously find somebody that does take the approach of comprehensive planning, that actually adds the idea of tax planning as an integral part of a comprehensive plan, not just, hey, how are we going to asset allocate your stocks, bonds, and mutual funds today? And, position them to somehow, you might make an average rate of return of X, Y, or Z.
Right.
But strategize so that Well, you said where to start.
Yeah.
Start by finding a person that does that. Second of all, bring your tax returns and let that person review it and find out what you can do to make it better.
I think when you boil it down, it's find somebody who cares. Find somebody who wants to help you plan for your future, somebody who understands the ins and outs and really wants to set you up for success. Would you say that's
I think
good way to say it?
That's a great job.
Perfect.
I should have memorized
I
that
love
line
the way
before I
you
came
said
here.
it. No, it's very, very important. That's why you're the professional, because you really know what's going on. So, Jeff, as always, thank you so much for joining us. I'm going to give him a little info. But again, nice to see you.
Great. Thank you.
Our pleasure. Now, the Passport to Retirement course will be taking place at the Pima Community College's North Campus in room A207 on the various dates that you see on your screen from 6 to 9 p.m. To learn more, please call 780-9059 or visit premret.com.